Hello traders, welcome to today's video. In this video we will be discussing with you a strategy and a new MACD indicator that based on machine learning algorithm. This indicator makes trading very simple, because this indicator identifies buy and sell entry signal, and also it shows you when to exit a trade. So try to stay to the very end of this video, because I'm going to share in details how to use this indicator and also examples using this strategy and indicator. But before we go into the video, if this is your first time coming across this channel, please don't forget to like, subscribe and turn on the notification bell to get notified when we upload a new video. So without any further delay, let's start. The indicator that we will be using in this strategy is called MACD Fake Filter by Hassan Rifat. This indicator is designed to filter when there is overbought and oversold in the market. This indicator uses a special algorithm to identify the overbought and oversold, and when this identifies overbought, it marks it out and label it. It also do the same when it identifies oversold. So to add this indicator to our chart, we navigate to the indicator search bar. There we are going to search for MACD Fake Filter. Select the one made by Hassan Rifat. Before we explain more about this indicator, let's first talk about the features of the indicator for more understanding of it. Then we go to the indicator setting. On the style setting, you can see the histogram, which is used to measure the volatility in the market. And when this histogram is green in color, it is positive histogram, and when it is red in color, it is called the negative histogram. Following it is the MACD line, which is the blue line. This one is called the signal line. And the green line above the green histogram is called the positive average height, while the red line below the red histogram is called the negative average height, and the dotted line between the two histograms is called the zero line. Then, the green wave that formed when the MACD line crossed above the positive average height is called the positive wave, and the red wave that formed when the MACD line crossed below the negative average height is called the negative wave. And lastly, the dot that the indicator shows when the MACD line crosses the signal line is called the label. And on this strategy that I'm sharing with you, the label will serve as entering signal. The green will serve as buy signal, while the orange will serve as the sell signal. Knowing everything about the features of the indicator, let's explain more how the indicator works. The MACD Fake Filter indicator is a tool that helps traders to use the MACD indicator more effectively. The MACD indicator is a popular way to measure the momentum and trend direction of a market. It consists of two lines, the MACD line and the signal line. When the MACD line crosses above the signal line, it is a buy signal. And when the MACD line crosses below the signal line, it is a sell signal. However, not all signals are reliable. Sometimes the MACD line can cross over or cross under the signal line without indicating a real change in the trend. This can happen when the market is moving sideways or in a range. These are called false signals, and they can lead to losses if traded blindly. The MACD Fake Filter indicator helps to filter out these false signals by analyzing the positive and negative waves that are created by the MACD line. The positive waves are the ones that are above the zero line, and the negative waves are the ones that are below the zero line. The height of the wave shows the strength of the trend. The higher the waves, the stronger the trend. The MACD Fake Filter indicator calculates the average height of the waves and shows it as a green wave. It also shows the buy and sell signals as blue and orange dots. The indicator helps traders to identify which signals are valid and which ones are false by comparing the height of the waves with the average height. If the height of the wave is greater than or equal to the average height, it means that the signal is valid and confirms the trend direction. If the height of the wave is less than the average height, it means that the signal is false and does not confirm the trend direction. By using this indicator, traders can avoid trading against the trend and only trade with the trend. This can improve their trading performance and reduce their risk. Knowing everything on how this indicator works, let's see we can enter a trade using this indicator. Looking at the indicator, you see that the MACD and the signal line has gone above the positive average height, creating a very huge green wave, which indicates that price was previously on a strong uptrend. Suddenly you see that MACD line has crossed below the signal line, which the indicator has printed an orange label, which stands for sell signal. And checking the histogram, you can see that it is showing red, which indicate that there's enough volume to push the price down. With this confirmation, you can enter a trade setting your stop loss above the previous high and targeting 2 risk-rewards ratio. Let's see how we can enter a buy trade using this indicator. Looking at the indicator, you see that the MACD and signal line has gone below the negative average height, which create a red wave, indicating that price was previously on a downtrend. And you can see that the histogram has turned to green, which indicates that there's enough volatility to push the price up. Also, you see that the MACD line has crossed above the signal line, which the indicator has printed a green label, which stands for buy signal. Then with this confirmation, you can enter a trade setting your stop loss below the previous low and targeting 2 risk-rewards ratio. As we have come to the end of the video, if you have any questions, leave it on the comment section. We will be glad to answer them. And please remember to like, subscribe, and turn on the notification bell to get notified when we upload a new video. Thanks for watching. See you on our next video.